NBC TV 18, celebrating 15 years of leadership.
We are focusing on developing India's defense industry with a sense of mission. This is why it is at the heart of our Make in India program.
The Prime Minister makes a strong pitch to ramp up defence production as he woos corporates at the 10th edition of the Aero India Air Show in Bengaluru. The Defence Minister promises to align procurement norms to ensure Make in India is a reality.
Bulls power ahead on the Lal Street. Sensex gains nearly 200 points and Nifty gains close to 1%. New records don't seem far away, but veteran market expert Mark Farber says valuations of Indian equities no longer compelling.
It's time for the centre to deliver, says HDFC Chairman Deepak Parekh. Warns of impatience creeping in as doing business remains difficult. Also says the new government has been lucky for the first 9 months thanks to lower crude oil prices. Adds that optimism is not translating into revenues just yet.
The appetite for coal mines remains strong on the 5th day of the auctions and a legal boost for the government. Delhi High Court dismisses Sarda Energy's plea against the bidding process. High Court says the auctions are neither arbitrary nor irrational.
Hero Motors stock slumps around 5% after the promoters sell stake in the company. The Munjal family offloads 3.5% stake worth $300 million. And sources say the Munjals are gearing up to make a play for Pipavav of defense. They may pick up between 15 to 21% in the company. Due diligence is currently underway.
Real estate stocks rally in trade after Mumbai's municipal corporation proposes to increase the floor space index to boost affordable housing.
Coast Guard DIG on video says the suspected Pakistani boat was blown up on New Year's Eve. Contradicts the government's claim, but Defence Minister Manohar Parrikar sticks to his stand and warns of action against the officer.
Swine flu continues to wreak havoc. Over 650 people are dead in the last 2 months. Over 10,000 people have tested positive so far. Centre asks the state governments to prevent panic.
Our build-up to the budget continues. Our budget caravan travels to rural Madhya Pradesh to find out how allocating more money for healthcare should be on top of the finance minister's priority list.
And if you have over 2 crore rupees to shell out for a car, BMW has a swanky new hybrid supercar for you. More details in just a bit.
This is not just a trade fair for defense equipment. This is a mega meeting of one of the largest global supply chains with the most advanced technology and a platform to launch India's defense manufacturing sector.
Well, India's air prowess was on full display as the Aero India show kicked off in Bengaluru today. But apart from fighter jets and choppers performing breathtaking maneuvers, the government made a strong pitch to woo investors and ramp up defense production in India. Good evening. Thanks very much for joining us on India Business Hour. And the centre is promising to improve the ease of doing business, specifically from a defense procurement point of view, to align the new norms to the reality of being able to produce more in India.
It'll be interesting to see how many investments we actually get after that. But Shireen, on a day when all of this is taking place, Call it the 9-month inch, but Deepak Parekh, one of the most vociferous proponents of this government, coming down quite strongly and saying it's time to act.
Well, that is right. Deepak Parekh saying that Achhe Din, not quite here. He has called on the government to get cracking, saying it's time now to deliver. That and a lot more coming up for you on India Business Hour. Let's get down to the day's trading action. As always, the bulls continue to be in control on the Lal Street, and new records don't seem far away. The Sensex surging nearly 200 points today, and it remains comfortably above the 29,000 mark. The Nifty gaining over 60 points despite slipping marginally in the last few minutes of trade. Mid-caps outperforming the blue chips, and the mid-cap index closing with gains of 100 points. But, and there is a but, veteran market expert Mark Farber, the author of the famous Gloom, Boom and Doom report, is not that hot on India anymore. Speaking exclusively to CNBC TV 18, Farber says he will stay away from India as equity valuations seem not so compelling and on the expensive side.
I think in general the economy is okay. It's not going gangbusters, but it's okay. In the meantime, the share market has gone up a lot over the last 12 months, and the valuations are in most cases no longer terribly compelling. I just looked at Nestle India. It's selling at close to 50 times earnings. So, you know, everything has to move in the right direction to justify these valuations.
Mark Farber saying the valuations in India are no longer compelling. From the equity markets, let's head across to the commodity markets and tell you how crude prices are holding up at the moment. The rally that we've been seeing over the last few sessions is starting to fizzle out. Investors questioning if that rally was even sustainable, perhaps also digesting that rig cancellation in the United States doesn't mean that crude production is really going to come down. And as far as gold prices go, testing the 6-week low, we have seen the yellow metal continuing to test the resistance level of $1,200 an ounce. That week-long absence of major buyer China as it celebrates its Lunar New Year, also keeping prices at bay.
The chance that oil is kind of bottoming out here, but I wouldn't bet too heavily on a major low, but I would bet on a rebound. I think oil stocks and oil servicing stocks could rebound here. Gold shares are the most attractive asset class within the equity markets. They've been hammered over the last 3 years since 2011 and are showing signs of bottoming out.
Well, that's Mark Farber. Indian equities don't look compelling, but he does expect a rebound in both gold as well as crude prices. Now, from one big voice to another, Deepak Parekh, widely considered one of India Inc.'s leading spokespeople, and he's called on the Modi government to get cracking. He's warned that impatience is slowly creeping in across the business world. Speaking with the Press Trust of India, or PTI, Mr. Parekh said, and I quote, "After 9 months, there's a little bit of impatience that's creeping in as to why no changes are happening and why this is taking so long having effect on the ground. The optimism is there, but it's not translating into revenues," end of quote. He goes on to say, and I quote again, "The thing is that our Prime Minister has had a lucky period in these 9 months. The world commodity prices are at all-time lows, which have helped India the most." Now, there is some truth in what Mr. Parekh is saying, especially about the lucky part, because remember, we actually have seen global crude prices come off and come off very sharply, and India has been the biggest beneficiary. So this government would claim that they've been able to bring down retail fuel prices, but it's been nothing that they've done. It's on account of what's happened globally. Now, on the other issue of the ease of doing business, you know, the government has overpromised, because what is under the realm of the central government is very limited. When you actually talk about the nuts and bolts of the ease of doing business, a lot of it is related to what the state governments do. Let's just take an example of the Maharashtra state government, for instance. The chief minister promising to bring down the number of approvals required to start a business in Maharashtra from 76 to 25, but that is going to take time, and hence this impatience creeping in, because there was an element of over delivery as far as the central government was concerned, and the Prime Minister clearly was the man who was making all of those promises. Now, the other indicators, despite what the CSO may say as far as the economy is concerned, we really haven't seen things turn around for the economy. It's not reflected in corporate earnings so far. It's not being reflected, for instance, in auto sales so far. It's not being reflected in consumption picking up. So there hasn't really been a turnaround in the economy, and that is what Mr. Parikh seems to be alluding to. Is there a change in sentiment? Undoubtedly there is a change in sentiment. Are people talking about the India story? Yes, people are talking about the India story. But as we've been reporting, and several global CEOs, domestic CEOs who've been on the channel have also been articulating very clearly that India lacks the execution ability. The execution challenge is what this government needs to contend with. So it's okay to make promises, whether it's Make in India or Swachh Bharat or whatever, or smart cities. We need to see the nuts and bolts. We need to see the execution plan, and that has what has kept big investors cautious on the India story, even though India is back on the investment radar. So Mr. Parikh, in a sense, articulating what a lot of people within the business community feel at this point in time, but it has to be seen contextually. It has to be seen in a much more nuanced way, Nentara.
Maybe it's the 9-month age like we were discussing. And here's the big international story of the day. Greece has confirmed it will seek a 6-month extension of the loans being provided by the Eurozone members. It's likely to seek that extension on Thursday, a day later than initially envisaged. However, it may not request an extension of the 240 billion euro bailout conditions. Remember, the country is locked in a tussle with its creditors since the existing bailout runs out in just 10 days without a deal. Greece is likely to run out of money. But guess what? The European equity markets have shrugged off the uncertainty over Greece. While we have seen the FTSE a little bit under pressure of late, the French CAC and the German DAX very much in the green. The British FTSE, like I told you, slightly in the red at the moment. And across the Atlantic, we have been seeing a sea of red when we look at the frontline indices, whether it's the Dow, the Nasdaq and the S&P 500, perhaps because housing starts data has been quite discouraging.
All right, let's move back home now. The government's Make in India pitch was on display to investors at the 10th edition of the biennial Aero India show. The Yelahanka air base near Bengaluru was buzzing with activity as it plays host to over 250 Indian companies and 300 foreign firms. The government has promised to reduce imports and beef up domestic production by making it easier for foreign firms to do business in India and align the defense procurement process to indigenous manufacturing. Rituparna Bhuyan and Purnima Murli bring you all the action.
Prime Minister Modi reiterated his Make in India sales pitch to the investors at the Aero India show and promised to provide opportunities to public, private and foreign companies to develop the defense industry and cut down on the billions of dollars spent on importing defense equipment. The message was clear. The government is willing to put its might behind building domestic capabilities and will give preference to made in India products.
We are focusing on developing India's defense industry with a sense of mission. This is why it is at the heart of our Make in India program. We are reforming our defense procurement policies and procedures.
While the Prime Minister provided the headlines, Defence Minister Manohar Parrikar offered a reality check. Parrikar admitted India's defence procurement policy is not in sync with Make in India aspiration and changes will have to be made to realize the manufacturing dream. The proposed changes include a non-discriminating tax regime and a friendlier offset policy.
Within 2 years, the interest in the defence sector and manufacturing in the defense sector has gone up tremendously, and we expect a lot of business deals and lot of deals which will take defense industry in India, basically Make in India, forward.
We also caught up with the chief architect of the Make in India campaign, DIPP Secretary Amitav Kant, who maintained that the government is willing to approve defense FDI proposals above the 49% FDI cap if it involves the transfer of state-of-the-art technology.
India has allowed 49%, but it has said that you can go up to 100% in cases of modernization and state-of-the-art. And we'll allow that. Let proposals come in. I mean, we've cleared about almost 33 licenses since this policy was opened up. And I think we'll allow many more This country is open to ideas, it's open to technology, it's open to transfer, it's open to manufacturing, and I think we'll look at it in a very creative and innovative manner, as the Prime Minister said.
Not just the government, we also spoke to the who's who of the global aviation industry and domestic players, and the sense we get is India is high on the radar.
Well, the real opportunity for Make in India is what the Prime Minister said, is embedding Indian supply in the global supply chain of aerospace industry. That's exactly what we're doing, right? It's a big industry with significant opportunity for Indian supplier. You know, Bharat Forge is a great company with significant capability. We're very excited about that. This is just a start. We're going to scale up, you know, significantly going forward.
Airbus production we do is for commercial jetliners. For Boeing, we work closely with Boeing military aircraft, and we make products that go into the P-8 program. We also make major structures for the Boeing Chinook, which is structures that actually were announced by the Prime Minister, which he referred to.
We do have a market forecast where we forecast the demand in the entire Asia-Pacific region, excluding China. Our forecast previews 570 new business jets being delivered in the Asia-Pacific region in the next 10 years. India is one of the main markets, most important markets in this region.
Well, that's the hot sector, all the action from the Aero India show in Bangalore, and a lot of those stocks were on fire today, whether it was BEML, BEL, and a whole bunch of other defense-related stocks moving up and moving up very, very smartly. Now, as we've been pointing out, this seems to be the sector that's creating a buzz with prominent business leaders, and we now learn from sources that the Munjal family are gearing up to make an entry into defense. Today, the promoters sold 3.5% stake in Hero Motor, worth about $300 million, and sources say the proceeds will be used to pick up a sizable stake in Pipavav Defense. Sonia Shenoy joins us now with the exclusive details. Sonia, this business about Pipavav being in talks with M&M has been on for a while, but now we're given to understand the talks between Pipavav and M&M may have fallen through, and it's the Munjal family that may be looking at a foray into defense via a buy into Pipavav.
Yes, that's true, Shireen. In fact, my investment banking sources tell me that the promoters of Hero Group are partnering with a couple of PE players. Could be names like either Bain or a Canadian pension fund. We have no confirmation on that, but we do know that they are partnering with PE players to buy stake in Pipavav Defense. The due diligence is on currently, and we understand that the deal could be sealed perhaps in the next 1 week or so. Now, we also understand that Hero will buy, or the promoters of Hero will buy, between 15 to 21% stake in Pipavav Defense. The deal with M&M and Pipavav has fallen through because the terms and conditions were not approved by Nikhil Gandhi, and currently, as we speak, the Hero team is in Pipavav in Gujarat, where forensic auditors are doing the due diligence. Now, I've also picked up from my sources, Shireen, that this will be a transfer of ownership, so there will not be any capital raising or any fresh share issuance. It will purely be a transfer of ownership. Now, whether the deal eventually goes through or not is yet to be seen, but for now, there is due diligence that is going on between the Hero Group as well as the Pipavav Defense. Back to you.
All right. Talks are on between the Munjals of Hero Motor and the promoters of Pipavav. Whether or not it actually fructifies into a deal, as Sonia was pointing out, is a different story altogether. Because remember, Pipavav promoters were also talking to M&M, and we understand that those talks have fallen through. Hero Motor promoters on their part have said that they cannot comment on media speculation.
And Defence Minister Manohar Parrikar, Shireen, was at that very air show in Bengaluru, and he was bombarded with some tough questions. This after a Coast Guard officer was caught on video claiming he ordered the destruction of a suspected Pakistani boat on New Year's Eve. The Indian Express shows the Coast Guard DIG BK Loshali directly contradicting the government's claims that the boat was set on fire by its own crew. The officer is shown as saying, and I quote, "I ordered the boat to be blown up. We don't want to serve them biryani," end quote. But the Defence Minister has rubbished those claims and warned of action against the officer.
The Defence Ministry stands to what it has stated earlier in writing to you. As of now, we have got denial from him. If any news channel shows that he has said that, I will inquire and find out.
Well, the latest controversy there staring the Defence Minister. Embarrassing times for the government. Now, it's day 5 of the coal block auctions and the appetite for the mines remains strong. 2 blocks that were up for grabs have now been bid out, one in Jharkhand and one in Chhattisgarh. Anshu joins us now with the latest update. Anshu, I believe SR Par has won the Tokisud North coal block for a 1,110 per ton. What more can you share with us on the other block?
That's the historic price for the power coal block, and government has successfully by now has auctioned 6 coal blocks out of 18 which was meant for the power sector. SR has won it at 1,110 rupees per ton for this coal block, which was earlier allocated to GVK Power. So all of the other qualified bidders have lost out on this, and SR Power will be using it for their Mahan project. The other coal block is still in running. That is Gare Palma 4x5, which is in Chhattisgarh, which is meant for the steel, cement and iron ore sector. There the bids were received highest at 2,050 rupees, which is currently around 2,900 rupees per ton. There, Monnet Ispat was the prior allocatee, and it is in the race for that coal block, along with Balco, Hindalco, Sesa Sterlite, amongst others. So we'll have to wait for that, but we'll have to see how the companies are going to get their returns on investment, how efficiently they are going to mine and transport these coal, which will be nearer to their projects. But clearly the government is unlocking the true value of the coal block so far. Back to you.
That's been one of the questions that analysts have also been raising, that are we seeing irrational bidding? So we've seen the Tokisud North coal block going to SR Power for 1,110 rupees a ton. The bidding for the other one still very much underway. More news coming in as far as the coal auction goes. It received a vote of confidence from the Delhi High Court, dismissing a plea by Sarda Energy against a 2-stage bidding process. The High Court said the auctions are neither arbitrary nor irrational. Ashmit Kumar was there at the High Court, now joining us with the details. Ashmit, this auction process has been mired in litigation. We've seen a slew of petitions that have been filed in several courts. Finally, some validation coming from the government.
Well, indeed, after days of, in fact, litigation before the Delhi High Court, finally a bright spot, the Delhi High Court giving a green signal as far as these auctions are concerned. And now, importantly, the Delhi High Court had set aside a petition that was filed by Sarda Energy. Sarda Energy had raised concerns about the 2-stage bidding process, about the fact that a number of bidders are allowed multiple bids. But the Delhi High Court set these concerns aside, in fact, reasoning to the petitioners that, in fact, from the data that is available so far with respect to the auctions of 11 blocks, the system appears to be very efficient in various cases. The prices that are realized by the government are far higher than the floor price that had been set by the government, and that was a good barometer, according to the Delhi High Court, to gauge the efficacy of these auctions. As you had pointed out, the Delhi High Court also reasoned that these auctions are not arbitrary, are not irrational, that they don't appear to be designed to suit any particular company or corporate group, and that they are progressing in a smooth manner, and that the Delhi High Court would not want to disturb this process which is currently undergoing. So on that count, the Delhi High Court has set aside the petition, and it's also important to point out that the Delhi High Court has vacated its earlier stay as far as allowing final bids in 3 specific coal blocks. That's Gare Palma 4x1, 4x4, as well as Gare Palma 4x7. So an important development, a vote of confidence essentially coming in for the government by way of this latest Delhi High Court ruling. Back to you.
Reason for the government to smile as far as that coal auction goes. Thanks, Adashmas, for joining us with all of those details. Now, a new 20-year development plan for Mumbai means not just more buildings, but bigger and taller ones. That explains why the city's municipal corporation, the BMC, has revised its floor space index for the entire city up to a maximum of 8. However, location is going to be the determining factor. Alexander Matthew and Sonia Shinoy have that story.
The Municipal Corporation of Greater Mumbai, better known as the BMC, is keen on changing the landscape of India's financial capital, quite literally. It has unveiled a new development plan for the city, which envisages some serious changes to the way construction activity takes place in it over the next 20 years, especially along railways and metros.
What the new plan says that depending on the location and depending on the density envisaged, you can have variable FSI going up to 8. 8 will be closer to the railway stations and activity magnets and the future office or high density districts that the government plans to do. Areas such as Dadar and around, areas Lower Parel and around, which are already seeing a lot of real estate development. reuse of erstwhile industrial lands getting rebuilt into office and residential blocks.
But some critics say such drastic changes to Mumbai's skyline may have a disastrous impact on the city's infrastructure.
If I talk about this whole thing as a citizen, obviously I am concerned a lot. Purely because in any case, the areas which are in any case congested, we are talking about increasing FSI over there. Increasing the FSI will only kill the already strained infrastructure, already bursting to its steam kind of infrastructure further. And that can actually kill the citizen, the lifestyle of the whole city.
Now this increased FSI means supply will go up in a few concentrated pockets, but some experts say that contrary to the popular belief, this will actually send prices higher and not lower.
These small and haphazard, small policy matters changes here and there only add the negativity. They actually bring the prices up. So unless there is a consolidated master plan with a good focus on infrastructure development is put into perspective, we don't see the prices coming under control at all.
Others say the changes themselves are a tad unrealistic.
The issue here is that it's pretty confusing if you look at this new development plan. Firstly, it's going to come 3 years forward. It's not going to be implemented immediately. There's an objection suggestion period. Also, at the same time, this plan has its own benefits. They are looking at the approval processes becoming simpler.
Also, there is no clarity on what FSI will be offered to slum rehabilitation projects, which are a major money spinner for most developers.
No, as of now, there is no clarity as far as the SRA schemes are concerned. I think the policy is still being drafted.
Until these clarifications come in, the increase in FSI to a maximum of 8 is only seen as a relief on paper. And unless the city's infrastructure gets a corresponding boost, these changes could well signal tougher times for a city that's already bursting at the seams. In Mumbai with Alexander Matthews and Sonia Shenoy, Ritu Singh.
Well, that's it on this edition of India Business Hour. From all of us here, many thanks for watching. Stay tuned to the channel. More news coming up.
Aditya Birla Group presents Budget 2015, the Make in India Budget.